Happy Saturday, Facebook. Happy Saturday, everyone that's watching. Today is Saturday, February 3rd, 2024. What another beautiful day and a wonderful blessing. I hope that everyone that's watching is doing well. This presentation is going to be all about today's home market in the Portland metro area is where I focus. My name is Rene Canler, your mortgage advisor here with Root Mortgage, licensed in both Oregon and Washington states, here to serve you and to serve the community in purchasing your home. It doesn't matter if it's your first home, second, third, maybe an investment property, or even just financial questions. What an honor to be able to support you. I'm going to focus the next 15 minutes talking about not just today's market, but strategizing in today's market, making that home ownership dream a reality, and of course, learning to use the trends in today's market to get you into your home, leverage the bank's money to get you a good deal and in a strong financial opportunity to, of course, continue to do this if you so please. All right, but first, a little bit about myself. If you are watching me on Facebook, you probably already know me. But here you go. I am honored to be here with my family. Oh, Nikki's missing. Gotta get Nikki on here. For those of you that know me, you know I was born in that beautiful island of enchantment in Ponce, Puerto Rico, product of a Puerto Rican mama and a Cuban father. That relationship didn't work out, and of course, I was raised in the city of Chicago. My mom took me there when I was a baby because her dad, my grandfather, was already in Chicago. I am a Chicago public school student, teacher, assistant principal, and I really am super grateful for what I saw from my mom and what I learned from her. You know, I saw a strong, independent, fierce woman who, because I was always with her, experienced racial, sexist experiences, responses, and what I saw was, it's not the experiences so much, but it's more so the response of the experience. And I saw strong responses from that fierce woman. It didn't matter what negativity she was given, she knew how to respond with tact, with courage, and she never kept her mouth shut. And what an awesome model to have. I think that's really why I jumped into schools. I was in education for 18 years, 26 years old when I became an assistant principal, 30 when I became a principal. And I really believe I wanted to be what I saw from my mom to the community that I had in front of me. I wanted to be someone that could help people understand, get a different perspective, and knew how to use those punches to be able to give back with love, to be able to give back with maturity, and so that people could learn from them and change as a result. Well, in 2020, I jumped out. From Chicago, I came to Portland in 2013 because of my beautiful Portland wife. It was time for her to come back home. So in 2013, I became a Portland public school principal, had a great 5 years, went to North Clackamas, but like I said, in 2020, the input just wasn't worth the output. I realized I was sacrificing my family for everyone else's over and over, and the burden became way too heavy for me to continue. So I'm grateful. I'm grateful that because of real estate, I had a comfortable savings account, and I jumped out, which was incredibly scary. But I jumped out because I believed in real estate from a very young age, from what I saw from my family. And now it's kind of ironic. I'm on the financial side. I am your mortgage advisor. I know the systems, the guidelines. I pay attention to strategy. What's happening in today's market? How are people buying homes, especially with all the fear that's been driven in our heads for the entire year? That's what we're going to talk about today. Before I transition, check out my beautiful kids. Hey, buddy. I got Maya in the background, 16 years old. Malia and Logan are 13-year-old twins. What a blessing. What a privilege. All right, well, check it out. Today's market, and you already know this, because if you've been thinking about buying a home and you haven't bought a home, it's probably because you're afraid of how high the interest rates have been. In 2022, we saw one of the steepest spikes in the industry in regards to interest rates. In 2023 of January, we started at around 6.5%, and we peaked at 8% in September of 2023. But since January, if you're reading any kind of media, if you're watching any kind of media, what you heard was, don't buy. You had people saying that home values were going to drop 20%. And as a result, very few people purchased in 2023. In fact, as the dust settled and the numbers came out, we had in 2023 the fewest amount of homes sold in the nation since 1993. 30-year all-time low, and at that point in 93, there were 80 million less people. That's a big deal. Well, as a result of those interest rates, what we saw happening in the market is that homes were on the market for a long time, much longer than they had been for a very long time. Because homes weren't selling since they were on the market for so long, and because there were few buyers that bought got into deals, and they received seller concessions, otherwise known as credit, to help cover closing costs as well as establish accounts to lower the monthly payment. That's the strategy. So here's just some numbers. Median sale price in December was $525,000 in the Portland metro area, and look at the total market time on average, 60 days. That was unheard of 2 years ago. A little further into the data, this is a comparison between 2022 and 2023. Check out the median sales price in the Portland metro area. In 2022, the year-to-date median sale price is $548K. In 2023, it did drop. It dropped to $532,000. That's a 3% drop in sales price from 2022 to 2023. So the media, with its wisdom, with I think a true desire to help people, truly scared people, said that prices were going to go down 20%. Instead, they went down 3%. And I'm blessed to have served many clients in 2023, and what I've gotten from them is just gratitude. They received seller concessions, many of them in the 20,000s, to not just pay the closing costs, but like I said, to establish these accounts to lower the monthly payment. If you want to buy, now is the time to buy. All right, now this is just a reminder of how the mortgage system works. And I created what looked like a fraction intentionally between debt and income. It's just 6th grade math. What is your monthly debt? That's determined and shown by the credit report. And what's your monthly income? That's shown by your pay stubs, your W-2s, or your tax returns, right? So once we have that information, we come up with a percentage. And it's that percentage that determines how much someone can qualify for when they want to buy a house. But it's not just the debt, it's not just the income, it's also credit score, right? When the credit report is pulled, we get a credit score from the 3 bureaus. We use that credit because that number is what determines pricing. It also is what strategically helps us decide what's the best loan program for you, for your family in this purchase. The credit report gives us the credit score that helps with pricing and loan. It also gives us the debt, which helps us with the debt to income ratio. But of course you need money, right? I mean, we do have 0 down loan programs. So when I write money here, it's for the down payment. You can go as little as 0 down. And if you have the money saved, you should use the money because then you'll get even more competitive pricing. In that case, the minimum down is as little as 3%. Just think, $400,000 house, 3%, that's around $12,000 that I'll need for a down payment. Let's get into it. So here's a home purchase example. This is a home that's live on the market. It's in Milwaukee. It's listed at $418,000. So let's just take a scenario, right? If I buy a $418,000 house and I put 5% down, my down payment is then around $21,000. That's if I choose to put 5% down. $418,000 home with 5% down is around $21,000. You could put as little as 3% down. And if you put a little as 3% down, then you're looking at around what, $12,600? So let's say $13,000 in that scenario if you want to get a $418,000 home with just 3% down. Now, $418,000 with 5% down, and I'm looking at around a 6.5 interest rate, especially considering 30-year conventional home-ready product. What that means is the rates are around 6.5% when the market closed as of yesterday, Friday. At a 30-year loan, considering the property taxes, the homeowner's insurance, and the mortgage insurance, the total estimate is around $3,032 a month. $3,032 a month. Some of you are thinking, well, how much money do I need to make in order to pay a $3,000 home payment? According to the way that the system is designed, just think about multiplying that number by 2. If my monthly payment is around $3,030, remember, that includes paying back the principal and interest, that includes the homeowner's insurance, that includes the property taxes, that includes the mortgage insurance, then you want to have an income of around 2 times that amount, let's say around $6,100 to qualify for that loan. $3,000 monthly payment, $6,000 a month income. That would be a good rough start to understand how much you need to make in order to buy a house. That cool? You got it? Awesome. Let's look at the principal and interest payment really quick. So I know that I said $3,032 for the total monthly payment. The principal and interest, which is just paying back the money that you owe, is around $2,510. Okay? Here's where I mentioned the strategy. Because houses are on the market longer, because sellers want to sell and they're not able to sell as quickly as they thought they were selling, the strategy is asking for seller concessions. So let's check out the next screen. All right, check it out. Same house, right? Now let's say I buy that house at $418,000 with my 5% down. I mentioned that the monthly payment, that's the principal and interest only, is around $2,510. You could strategically work with your realtor and say, hey, you know what? The house has been on the market for a while. Can we lower the price? Let's lower it $28,000. Let's make it an even $390,000 price. You could do that, right? You can offer that price, and in this market, we're seeing that happen, where the sellers are saying, let's do it. A $28,000 drop. In the same scenario, right? The price has changed to $390,000, but I'm still putting 5% down. Same interest rate at 6.5. Now that monthly payment is $2,342. Hey, I'm saving money. I'm saving about $170 a month by making that $28,000 drop in price. $170 a month. Here's the strategy, and here's where I wonder how many more clients I can support in using the seller concessions to not just pay those closing costs, but also to help lower the monthly payment. So check it out. Same example, but let's keep the price at $418,000. We're not going to ask for a $28,000 drop in price. Instead, we're going to ask for seller concessions. And when you look at the comparison, instead of dropping the price by $28,000, let's ask for $21,000 in seller concessions. Here's what that $21,000 can do. Average $10,000 in closing costs, that's covered. So then what do you do with the rest? What you do with the rest is get what's called a temporary buy down. I know some of you have heard about this already. You know that a temporary buy down is the ability to save money on your monthly payment for a temporary amount of time. In this example, I'm looking at a 2-year temporary buy down. It's also known as a 2-1 buy down. And the reason why it's known that is because it's as if you were saving 2% in interest each month for the first 12 months. It's as if you are saving 1% in interest each month for the next 12 months. It's a 2-year temporary buy down that is around $11,000 of savings, which is why we need the sellers to contribute those $11,000. Check out the difference in monthly payment. For the first 12 months, out of your pocket, $2,012 a month. That is almost $500 a month in savings for the first 12 months. That is a lot more than the $174 you get by dropping the price of the home for $28,000. But it's not just the first year, it's then the second year. In that second year, you're saving what is equivalent to 1% in interest. So then you're paying $2,255 out of pocket of principal and interest per month. Look at the difference. That's about $250 a month in savings. $250 in savings a month for the next 12 months. So for those first 2 years, you are saving a lot more than what you would be if you just dropped the price $28,000. Now here's the other thing. Remember, this is the seller's money. The seller's money is being put into an account that actually acts like a subsidy, right? It's subsidizing into that monthly payment. Out of your pocket, you're paying that $2,000 for the first 12 months, that $2,255 for the next 12 months, and then the seller's money is paying the rest for those first 2 years. But what we're seeing in this market is the rates continue to trend down. So if you're refinancing before those 2 years are up, whatever money's left in that account is applied towards the principal balance of what you owe. You're never losing that money. It's a no-brainer when it comes to the purchase of your house, especially in this market. The reason why it's being seen more and more, besides people talking about it, is that the houses have so much time on market that the sellers are willing to do it instead of continuing to lower the price. And listing agents, especially savvy listing agents, those that represent the sellers, know that they can actually get a deal. Instead of dropping the house price by $28,000, why don't we negotiate seller concessions? It's going to be less money out of pocket from the seller. That's why this is working well. It's time to strategize. Don't be scared. If you want to buy the house and you can afford the monthly payment, buy the house. What will happen when the interest rates continue to go down? What will happen when people want to then actually buy, and now you have more people buying? The houses won't be on the market as long. And that means the pricing will be more competitive. Home values may start to go up again, and these seller concessions won't be an option. The time to strike, if you're ready, is now. All right, so check it out. If you are interested, you want to know what the next steps are, you want to know how much can I truly afford, it's a free consultation. Just call me, email me. I'm more than happy to support you. This is what you need to do. You need to apply for the loan. Right now, many people have $500,000 in their pocket to go buy a house. They need a loan to purchase a home. So you apply for the loan. That application includes your credit being pulled, which then allows me to see what are the debts that are in your name. It also gives us a credit score. From that application being submitted, you need to submit some documents as well. Your ID, the last 30 days of pay stubs, the last 2 months of bank statements to show where that down payment is coming from, and the last 2 years of tax returns. Those are the documents needed to get the process started. This free consultation then provides a roadmap. It's a plan for you. Are you ready to buy next month? Maybe you'll be ready to buy in 6 months. Maybe it's a year. I had 2 clients that closed in 2023 that I met with 2 years ago. Don't worry about the immediacy of getting the home. Just focus on what will it take for me to get the home. After you know what to do, you will do it. You will then become a homeowner. And from there, That's the beginning of generational wealth. Again, next steps are to apply. If you're watching this on the screen, can you scan that? I always wondered about that, right? People say scan it, it's on the screen, but if I'm watching on the screen on my phone, how can I scan it? You can call me 971-350-8969. First step is to apply. From the application process, it's submitting documents. From submitting documents, then we meet. We can meet here in person. I am at Root Mortgage. We are live in person in Clackamas, 10151 Southeast Sunnyside. All the Portland metro area folks, we are close by. And don't worry if it's a busy day or if it's not as close as you'd like it to be. We can do a Zoom meeting. All we need to do is to get the process started, apply, submit the documents, we meet, and then from meeting, we know how to execute. Oh, look at that. It's a pretty version of what I just said. Apply. Once I get the application and documents, I review the file. We meet. That way you can learn your options. From there, we just strategize, right? Like, how's the market? What are we able to do? Can we do it? Let's talk to the realtor. Who is your realtor? Do you need me to connect you with the realtor? Let's strategize with the person that knows the housing market as well. And then we get a plan so that you can get into your home. Questions? If you have any questions, call me. You got my number? Look, it's right there. 971-350-8969. It's funny. I was talking to someone recently and she said to me, it's like you have infomercials. Yes. I got infomercials. But more importantly, I want to be able to support you. And so I'm trying to be out there as much as possible so that you can see that you do have options. And sometimes we're afraid to even check. We're afraid to make that phone call. I mean, even the media put fear in the buyers, so much so in 2023 that it was the least amount of homes purchased in over 30 years. And those that bought got deals. Don't let fear stop you. I would love to support you. It would be a privilege. Feel free to call me, 971-350-8969.